Hello, this is Sarb Lally from the BC Teachers Federation. I'm the Assistant Director in Pensions and Group Benefits, and this is April 12, 2023. And thank you for joining me in this seminar on what is shortened life expectancy benefit. And that's part of our frequently asked questions series of the BC Teachers Pension Plan. So let's get started right away. What is the shortened life expectancy benefit? Well, a shortened life expectancy benefit is a payment to a non-retired member with an illness or disability that is terminal or likely to shorten their life considerably. And it's required under the Pension Benefit Standards Act to be provided through the Teacher's Pension Plan. Now, why would a member take a shortened life expectancy benefit? Well, for starters, a member may not live long enough to realize or enjoy their pension. And a member may need to pay for immediate medical or care expenses related to their illness. For example, if they're seeking treatment in the United States of America or another country, the bills may be adding up and they could be quite huge. So the shortened life expectancy benefit may help them meet those needs. Who is eligible to take a shortened life expectancy benefit? So it's any non-retired member who is entitled to a plan benefit and who has an illness or disability that a medical practitioner certifies is terminal or will considerably shorten the member's life expectancy. And the member must be under the latest retirement age. That's, you have to be under age 71, as defined in the plan rules and federal income tax regulations. Let me get more specific about 71. So the latest retirement age is always December 1 in the year that you turn 71. So for example, if I turn 71 in May of 2023, I could technically still be eligible for the shortened life expectancy benefit because I haven't hit December 1 yet. Because December 1 in the year that you turn 71, that's the date that you have to retire from the plan and start collecting your monthly pension. However, you don't have to terminate employment. And under the shortened life expectancy benefit, you do not have to terminate your employment with your employer or your salary indemnity plan benefits if you're on short-term or long-term disability. That's very important information that you need to know. Because you can keep working or you can stay on disability if you're on disability already. You don't have to have one or the other. Now, who is the medical practitioner? Well, they have to be a registrant of the College of Physicians and Surgeons BC and be entitled under the Health Professions Act to practice medicine and use the title medical practitioner. So it can't be me. I can't, sign a certificate for you in order for you to obtain the shortened life expectancy benefit because I'm not a medical doctor. It can also be someone who works in another province and holds the equivalent credentials. So under that province's College of Physicians and Surgeons, if they're registered, then they're able to provide you with the appropriate medical certificate. And also in some case-specific scenarios, a certificate signed by a physician who is properly licensed and in good standing in the jurisdiction outside Canada where the member lives may be acceptable. So for example, it could be a doctor who's in Washington State. As long as they're registered with that state's appropriate medical authority, they're able to find a medical certificate for you. It could also be a doctor in another country, as long as they're registered according to the appropriate professional body in that country. So what qualifies as a terminal illness or a considerably shortened life expectancy? Well, this is left to the discretion of the medical practitioners. So it's the doctors who decide whether you have an illness that's terminal or one that's going to considerably shorten your life expectancy. In some other jurisdictions, we see that they've imposed or allowed for a time limit on what a shortened life expectancy is. For example, in Ontario, a member is eligible for shortened life expectancy benefits if they're expected to live 2 years or less. But in British Columbia, there is no legislative authority for the teacher's pension plan to unilaterally impose such a time limit. So here in BC, it's left up to the discretion of the medical practitioners to determine what is a terminal illness and what is a considerably shortened life expectancy. So what impact does a shortened life expectancy benefit have on my spouse? Well, these shortened life expectancy provisions do not override spousal entitlement to the member's pension benefit. So if you do have a spouse, then to receive a shortened life expectancy benefit, the member's spouse must complete the spousal waiver form. And in doing so, the spouse waives entitlement to any withdrawn benefits, including partial payments slated for withdrawal, but which have not yet been paid. The spouse, though, would still be entitled to any locked-in partial amounts left in the plan. Because you don't have to take the full amount of your pension out of the plan, you can still leave some of that in the plan, as we'll get to a little bit later. The spouse would still have an entitlement to what's left in the pension plan. But whatever you've taken out of the pension plan, the spouse would not have an entitlement through the plan for that amount that you took out of the plan. That entitlement could arise through your will, for example. What impact does a shortened life expectancy benefit have on my former spouse? Okay, if you have a former spouse, that means you're separated or you've divorced and no longer meet the definition of spouse in the teacher's pension plan. A former spouse with entitlement to a proportionate share of your benefits remains entitled if the member elects a shortened life expectancy benefit. If the member has not reached earliest retirement age, for example, age 55, and they elect a shortened life expectancy benefit, the former spouse is entitled to a commuted value of their proportionate share. And if the member hasn't reached the earliest retirement age, so if you're not at age 55 yet, and you choose a shortened life expectancy benefit, then the former spouse is entitled to either a commuted value or a monthly pension for their proportionate share of your pension. So, payment options. So how can a shortened life expectancy benefit be paid out? Well, there are 3 payment options. Option 1 is that you can take out the full lump sum commuted value of your pension. Option 2 is that you can take a partial lump sum commuted value of your pension and leave the rest in the pension plan. And option 3 is that you can take a series of payments over a defined period of time. For example, you could say I'd like, 4 payments spread out every 3 months over the next year. And those series of payments could be for the whole commuted value, or they could be for part of the commuted value of your pension, and you leave the rest of your pension in the plan. Let's go into these options more closely. Let's look at the full lump sum commuted value. So in this case, the amount is fully unlocked and will be paid in cash with the applicable tax deducted. A portion may also be eligible for transfer to a tax sheltered account. For example, let's take a look at a member who has a commuted value of $667,000. You may request $300,000 to be transferred to an RRSP, and the remaining $367,000 to be paid in cash to you, less the applicable taxes. In this case, no money is left in the pension plan. So no spouse, no beneficiary would have any further entitlement to any part of your pension because you've taken it all out. Option 2, the partial lump sum commuted value. So in this scenario, the payment will be in a specified amount, which is less than the value of the member's total commuted value. So let's take a look at a member whose full commuted value is, once again, $667,000. The member could elect a single partial payment of $300,000 or $100,000 or any other amount and leave the rest in the plan. Whatever you've withdrawn is fully unlocked and paid in cash with the applicable taxes deducted, unless you've transferred that amount into an RSP, in which case taxes won't be deducted. And then the amount that's left in the plan goes to your surviving spouse or other beneficiary as applicable. Now let's take a look at option 3, a series of payments over a defined period. So in this situation, the member requests the amount to be withdrawn and specifies the period of time over which payments will be made. So it could be 3 months, 6 months, a year, 2 years. The member may choose to leave some of their pension in the plan for a survivor benefit. Okay, so you don't have to take it all out. You could leave some of it in the plan, like the partial lump sum, option 2. But in this case, you'll have a series of payments. For example, you could annuitize the commuted value of $667,000 over 13 months. That would give you 12 payments of $50,000 and 1 payment of $67,000. Or you could annuitize the commuted value of $667,000 paid over 67 months, with 66 payments of $10,000 each and 1 payment of $7,000. Okay, so that's available to you as well. The amount that's left in the plan goes to your surviving spouse or other beneficiary as applicable. Okay, if you leave anything that's in the plan. Now, what happens if the member dies before taking the shortened life expectancy benefit? Well, here the normal pre-retirement death benefit rules apply. So if you die and you haven't taken a shortened life expectancy benefit, then depending on what age you are, different rules apply in the teacher's pension plan. For example, if you die before the earliest retirement age of 55, your spouse may choose an immediate monthly pension payable for their lifetime, or they can choose the lump sum equal to the value of your contributions with interest, or the lump sum commuted value of your pension, whichever is greater. If you die after age 55, your spouse is only eligible to receive an immediate monthly pension payable for their lifetime. If you don't have a spouse, or your spouse has waived their right to a pre-retirement death benefit, then your beneficiaries will receive a lump sum death benefit equal to the greater of your contributions with interest or the lump sum commuted value of your pension. And if you don't have a spouse and have not named a beneficiary through the plan or in your will, the benefit will be paid to your estate. If you have a former spouse, when the plan pays death benefits to a former spouse, the teacher's pension plan follows the terms in your signed separation agreement, registered court order. Okay, and as this note says, The benefits are paid either to the member spouse, named beneficiary, or estate as applicable. Now, what happens if the member dies after being granted a shortened life expectancy benefit? Well, if the full commuted value is withdrawn, there's no further entitlement to any benefit. If a partial commuted value is withdrawn or annuitized, any unpaid annuitized amounts go to the estate. Anything that's left in the plan, any of those locked-in amounts remaining in the plan, go to your spouse, your named beneficiary, or your estate as applicable. All right, who can you contact for more information? You can contact the Teachers Pension Plan at 1-800-665-6770, or you can contact me at the BC Teachers Federation. And my direct line is 604-871-1949. My email is slalli@bctf.ca. Hope you've enjoyed this presentation. Have yourselves a great day and see you next time.